absorption costing is higher
Yes.
than the profit under the marginal costing.
Yes.
And we clearly can see that the difference is coming from, for the 2000 units we didn't sell.
Yes.
And the only figure that affects that 2000 is the fixed manufacturing overhead portion of the 2000 units.
Yes.
So if we go back to the original question, it says the total fixed manufacturing overheads for 10,000 units was $300,000. If that is for 10,000 units, how much is for 2,000 units?
Yes.
So you divide it by 10,000 times it 2,000, it tells you that for 2,000 it's 60,000.
Where did you get the 300,000?
It is in the question,
In the
because
question.
if we go back to the question where we started it, it says fixed manufacturing overheads
300,000.
300,000.
Right.
We have treated this as a product cost under absorption costing,
Yes.
whereas we have treated it as a period cost in marginal costing.
Yes.
Clearly understanding that thing, what we are trying to say here is, in absorption costing, we have divided the fixed manufacturing overheads into the sold units
Yes.
and the retained units. So closing stock and the sales. Whereas under marginal costing, we are not bothered about have we sold everything or not, but if that an expense, you just take out the expense.
Okay.
So that's how we understand
So
that.
the difference is going to be in the products which are not sold.
Absolutely. So which is left behind for next year to take over as a sales. So that's your closing stock. Because the stock is lying there, the cost of that stock includes the element of fixed manufacturing overheads in them under absorption costing. So if you calculate cost of closing stock under marginal costing, you are just looking at the variable cost. When you're looking at closing stock under absorption costing, you're looking at the variable cost plus the element of fixed manufacturing overheads in them. And that is why there is difference between the profits. And this is what we have just seen here. That the two differences are arised because of only one figure, which is your fixed manufacturing overheads and in the closing stock.
Yes.
And
So how do we reconcile this then?
That's the only thing, because we have to only find this figure.
Yeah.
And we said this is the higher profit. You take out the fixed manufacturing overhead portion of closing stock, which is 2,000 units, and it gives you the profit under marginal costing.
Okay.
And that's the reconciliation.
And that's the reconciliation.
Yes.
Okay. So so it still comes to the same anyway.
Absolutely. We are just telling them why there is a difference. So reconciliation is basically finding and analyzing the difference, that why there is a difference, where that difference has come from.
Yes. So really, if we look at the contribution figure
Yes.
for that's for
Marginal
marginal
costing. Yes, that's marginal costing.
We can see that the contribution figure is going to be higher, less than.
It's going to be
It's
higher,
going to be
than,
higher than the absorption
the
costing.
gross profit.
Gross profit.
So the gross profit, if you see, is 688,000.
Yes.
Whereas the contribution is 928.
Yes.
Because we have already taken out the fixed cost from here, which is manufacturing fixed cost.
Yes.
But in marginal, we are not doing that, because we are just looking at the variable elements.
Yes.
Here.
So obviously, because you're only looking at the variable elements, not going to include the fixed elements, so you're taking out less, so your contribution is going to be higher.
We're taking out less here, but we are taking out more here.
Yes.
Because we are taking all of the fixed cost out,
Yes.
no matter we have sold those units or not, but we are still taking it out.
So really, the net profit is going to remain the same once you reconcile the accounts.
Absolutely.
But the main difference in the figures is going to be either in the contribution, which is on the same level as the gross profit, as the absorption costing.
Yes, absolutely. Absolutely. Makes sense.
Excellent. Okay, so excellent. So I hope we've explained that well. You've really made it clear to me, and I'm really, really grateful. And I think once the students see this and see you explaining it, you've been very clear and concise and eloquent in terms of how you've explained it. I don't think you could have put it any simpler.
I've tried my best, but still for referencing, they can look the slides, they
Yes.
can try more questions, practice the examples, and that will help.
But let me ask you a question then, because so why would people use absorption as opposed to marginal costing?
It depends upon, it's not saying that one is better than other, or should we use absorption, or why people use more absorption, not more marginal, or more marginal. It depends upon what decision you are looking at. If you as a management accountant is reporting to the senior managers,
Yes.
and they are asking you, we can see that the product cost is going up. What can we do about it? Can you tell me what costs are involved? Understanding that aspect, we can say that you can't control the fixed cost, but you can manipulate on variable costs.
Yeah.
You can see what variable costs are involved, how you can bring it down and all that stuff.
Yes.
So that's why they might ask you to produce a marginal statement.
So, I mean, the key thing here is about looking at the bottom line. The bottom line is really going to be the net profit.
Yes.
But the net profit then is going to be really the expenses of how the administration costs are.
Yes.
But then another way of trying to increase your net profit is to look at your either the contribution or your gross profit.
Absolutely.
And therefore you can either increase your retail prices,
Yes.
or you can reduce your stock costs.
Yes, and to reduce the stock cost, you can't look at the fixed side because you can't change it. You look at the variable side because that's which is.
And so the marginal costing is key if your profit margins are really tight and you're looking at how to improve things within the company.
Yes.
And so by looking at the variable costs in marginal costing,
Yes.
then you can say to yourself, hang on a minute, are these costs too much in relation to the industry
Yes.
standards, and can we reduce them down?
Yes.
Or can we go abroad and buy these in economies of scale?
Very clear, yes, why not? And that's, you only come to know when you have produced these
Yes.
statements and the
Yes.
breakdown of your cost is
So
there.
we can see why, in the main, we do see gross profit, and marginal costing is rare to see, but marginal costing is actually necessary for analysing the business.
Absolutely, and they're not interested, again, like you just said, they're not interested in a net profit figure, they're more interested in the contribution figures.
Excellent. Thank you very much. You've made it absolutely clear.
Thank you.
Shake my hand.
It's my pleasure, ultimate pleasure to be here.